Shares of both Boeing and one of its manufacturers, Spirit AeroSystems, are up more than 3% after getting a vote of confidence from India's Akasa Air, ordering 150 Boeing 737 MAX narrow-body planes. But Spirit shares are still lower by about 12% since that door plug blew off a 737 MAX 9 during an Alaska Air flight. That incident not deterring Citi research, the firm initiating coverage with a buy and a $39 price target. Analysts calling the stock a show-me turnaround story. Jason Gursky, senior analyst with Citi Research, covering the aerospace and defense sector. They got a lot to show, Jason.
Well, yeah. Look, that's right. The big picture thesis here, right, is that their customers, Boeing and Airbus, have lots and lots of backlog going out years, and they need to fulfill the orders that have been placed to them. So they're going to be rising production rates here in front of us. And with that will come higher volumes for Spirit and over time, better margins and better cash flows. So our story here is really about the macro backdrop for the industry that Spirit operates in, and over time, better execution as they work closely here with Boeing to kind of right the ship from an operational perspective. They benefit from some better pricing terms that they eked out here recently with Boeing, hope to get with Airbus in the future. And, benefit from these rising production rates and expanding margins and cash flows into the future.
Should I feel comforted that a company that has had, I think you even cite this, has had some manufacturing issues over the years, is going to be producing even more fuselages? They're not going to be slowing down and taking things a little more carefully. They're going to have to ramp up to meet demand, so they're going to move faster.
Right. Yeah, I think you would be concerned if this was a company that was experiencing these issues in isolation. But we're seeing this across the industry, right? Not just the commercial side, but on the defense side. People are struggling post-pandemic with an inexperienced labor force and supply chain bottlenecks. So Spirit's not unique here. I think one of the things that makes me a little bit more comfortable about all of this is that there's going to be an incredible amount of attention paid to this. So we might have to hire some more inspectors and bring some more people into the workforce at both Boeing and at Spirit here over the next couple of years to make sure that we're getting the quality right. But this is not an issue that's unique to Spirit.
What is this incident involving the door plug and the grounding of these 739 MAXs going to do to Spirit's finances near term? Is it a large number hit? Is it a small number hit that they will step over relatively easy, or what?
It's a small number, right? I think, they're continuing to produce. Boeing is continuing to deliver aircraft. As I just mentioned a minute ago, I think there's going to need to be some more investments by both Boeing and Airbus to increase inspections. If you've got a young workforce that isn't experienced as what you had in the prior cycle, you probably need to throw some more inspectors into the mix to make sure that the work is getting done. So a small hit maybe to the financials as they bring on some more people. But I think over the longer term, that'll be masked by the rising volumes and the operating expense leverage that you would expect with a manufacturing business that's experiencing higher volumes.
A small hit, we're talking about pennies per share?
Well, look, for Boeing, I said it was maybe $250 million on an annual basis that they've got to throw into the mix. It would be a very small fraction of that for a company like Spirit, right? Boeing is the 800-pound gorilla here. They're the ones sucking up all the revenues, and they're going to be making some big investments to check the work, not only of their own factory, but the factories of their suppliers as well.